Hi and welcome to Market Conversations. Just want to do a quick video on Alibaba. This stock has been beaten down day after day and no news can bring it up. It's either good news, bad news, it's just going to drop the stock. And I know a lot of people like myself who's down quite a bit on this stock, thinking that 200, 250 was a good buy. Even 150, a lot of people thought it was a good buy. And now it hit a low of 135. Is that a good buy? Well, we don't know. If we take a look at, let's go back 5 years, weekly chart. We are at a very strong support right now. And we go back to 2019 where it was trading around 138, 136. So hopefully that it will bounce, because if it doesn't bounce, it can get really ugly. But before I continue on, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I also have a Discord Patreon that I'm trying to grow. So if you guys want to share ideas, come check out our very small community. It's been a very stressful few months. Actually, it's been a very stressful year after losing a lot of money back on June 2nd. And it's just been nonstop. And I'm sure a lot of people feel this way as well. If you're not invested in, let's say, Tesla, Microsoft, Nvidia, you are down quite a bit on stocks. A lot of Chinese stocks are down. They're down over 50%. We'll take a look at the news. We see a lot of downgrades. This was on November 22nd, which is today. Alibaba's price target to 178 from 190 maintains buy rating. And then Alibaba stock and others fall after new Chinese scrutiny. Why the worst may be over, but is it over? Since China's State Administration for Market Regulation said Saturday that it had fined the 3 companies, among others, for breaching antitrust law by failing to declare deals as far back as 2012. The competition regulator imposed a fine of $78,000 for each of the 43 cases listed in its investigation. I don't know if this will ever be over. But what do? Well, first, we don't buy short-term call options because we're just going to get destroyed. What we want to do is, if you can't afford to buy shares, buy leap calls or buy call debit spreads. So that's what I've been doing in my Robinhood accounts. Okay, so take a look down here. I am down quite a bit on Palantir and Alibaba. The market has just been on a downtrend, even though a few stocks are only keeping the market up. So we have Alibaba. These don't expire until next year, June of 2022 and September of 2022. If you don't know what a call debit spread, we can take a look at it together. So Robinhood has a great description of all the strategies. This is a call debit spread. You would use a strategy if you think a stock price will rise moderately before a certain date. It comes with the risk of limited losses and the potential for limited profits. Okay, so we'll take a look at which one I currently have. So I have a few of these. I have the 190 and 195 calls and the 205, 215 calls. So I think these are pretty good. So if we were to open another one up, we would only spend $55 to make a max profit of $4.45. I do believe that the risk to reward is pretty good here. You can also go to a further out expiration date. So this one's a 205, 215. Let's take a look at how much this is. So this one is going to cost us $143 per contract, but now we're looking at making $857. We're risking $143 to make $800. The risk reward there is pretty good, and this expires in September. I also have call debit spreads on Palantir. These all expire in June. I still have high convictions in Palantir, Baidu, and Baba. That's why I've been investing. If you guys have high convictions, now would be a great time to dollar cost average or just keep holding. But don't panic sell, especially if you have high convictions. especially if you have shares. There's no expiration dates whatsoever. That's why I highly suggest don't go crazy on short-term call options because you will lose money, especially if we don't know the direction on which way the stock will go. So that's all I wanted to share. Let me know in the comments down below if you guys are buying the dip on Alibaba, and hope to see you in the Discord.
Everybody's very worried about the significant and abrupt deceleration in growth, and as you went through, it's also the competitive losses to JD.com. So those are the big concerns right now. It's really interesting because just a year ago we were talking about the Ant Financial IPO, and Alibaba's stock was over $300, and it looked absolutely built for perfection. And here we are a year later, growth is decelerating, their margins continue to deteriorate, and again, the main concern right now is that they're having competitive losses.
Let's talk about that sharp slowdown that we've been referencing and that the companies have warned about today. What's driving that essentially, or is it a confluence of factors? Is it the fact that we are seeing the Chinese economy slowing as it comes out of its post-pandemic recovery? Is it that there's too much competition now and that they're getting a smaller piece of the e-commerce and retail pie? Is it the regulatory overhang that we've been talking about now for 12 months? Is it China's shift to wanting there to be common prosperity, or is it all of the above?
It is all of the above, but let me try to rank them. It is first and foremost the slowdown in the Chinese consumer. It's been clear in terms of slowdown in GDP, in terms of the slowdown in retail sales, but that we already knew. What was new today was the fact that their competitors are growing faster. That may tie to the other topic you brought up, which is Alibaba has had the crosshairs on their back from Chinese government and Chinese regulators, where a company like JD.com may not have had to deal with that quite as much, and that has impact on brand, it has impact on consumer behavior. So all of these factors are contributing, but overall the deceleration has mostly to do with a weaker Chinese consumer. And as you look forward, that's a concern. If the Chinese consumer focuses on the value of their home, and to the extent that value stops going up or perhaps even starts going down, Chinese consumers not going to get any stronger anytime soon.